Good morning. All right. Good afternoon, everybody. We're going to start here in about 4 minutes. Good afternoon, everyone. This is Market Wrap for today, May the 7th. We had an eventful day today. A lot of fantastic trading, and do want to do some shout outs, actually. I think that this one might say it all. Vitaly said he wanted to scratch my trading prowess. He posted his profits, I think mostly on gold and the NASDAQ. We had some great trades today, and I'll go through all of that, but definitely wanted to hype him up, and I think that all of us had a very good day today. So let's get into the charts. One of the things that you will notice is that the dollar rallied today. And, you know, we've been in this pattern here generally with regards to this trend channel. I personally think that this is a bullish in nature. All that being said, we had a peak above and then we failed. We have potentially a double top setting up, but I'm not ready to give in on the dollar yet. As a matter of fact, the dollar actually has held its next series. What you'll see is the dollar had rallied from the bottom here in March. We ended up trading a halfway back short at the 38.2% line. We traded up to the objective in April. We've since been trailing down a little bit. We are setting ourselves up potentially for a higher run here in the dollar, and I do think that the fundamentals actually start to are really in the dollar's favor. Strongest economy, the fact that interest rates are going to be higher for longer, and we may not get a rate cut. So all of that should bode well for the dollar. And I think that any opportunity you can do to buy the dollar relative to other currencies, especially the euro and the yen, is important. And so you're going to do that. Now up here we had potential yen intervention, and you might still get that. So do keep that in mind from the Bank of Japan. All that being said, I still think the dollar fundamentally is in good shape. And that does tend to lead for lower prices going forward in our commodities and the stock market. It certainly gives you an anchor or a headwind. And so let's get into that. Crude oil has been doing fantastic for us. This short that we've identified, really going back to the top up here, but even since breaking down through this band, you can see that we've traded this short once, twice, a third time, a fourth time, and now we're on a fifth time down here looking for shorts in oil. Crude oil has had a challenge getting above 79.43. As long as it stays underneath that 79.43, we continue to expect lower prices here in crude. I do think that it is getting towards the end, so this is frankly a tougher short than up here, and so there is potentially an all the way halfway back short from up here. If we should pierce the 79.43 level, I do think that we can get to 80, 81, or even 81 and 85 at some point. So that is your big target, so long as the short gets pierced. Until then, the possibilities are for crude oil that we see lower levels going forward. Gold, we had a couple of trades in gold today, and I liked those trades initially from the short, and I'll give you those setups. We were up here above this 61.8% line on a multi-hour basis here. And so what we basically did was just look for, frankly, cheap shorts. And what we see here is that there is definitely a cheap short up here above 26, and we took it. We actually got in at 24. We ended up covering it based on a move higher in the European time session. You should have had a take profit or break even stop there, and then we ultimately reestablished that short a little bit later in the morning. And what you can see is that by reestablishing that short up at 20, we actually wrote it down. The problem that I had was that it looked like we were going to basically range out here, and that's exactly what we did. So we're kind of stuck in between a couple of setups. Here is the short setup, but there is also a long setup at play here, and you can see that that is what's providing support. And so because we're kind of stuck between these two setups, I don't anticipate it going anywhere. Now, we do have some clues in terms of ultimately where it could go, and I think that those clues reside in silver. So let's take a look at silver, because silver's chart is dramatically different and quite a bit weaker. So let's look at silver, and I'm going to delete all of these, and I'll just do the fib analysis from the top. Now, silver has had I think what one could say a double top here. And that double top is pretty significant on a relatively short time frame. It's actually, you can see, it's a double top on our short time frame. It's more like a quadruple top at this level of 27.75. Now, silver is really important, and I always like to keep silver up on my screen because I think silver is a confirmation or a decider for gold. When gold is undecided, silver tends to be the one that leads. And I think that what you're seeing is that silver has definitely been the weaker of the two metals that we're tracking, and ultimately is having challenges just getting to its 50% halfway back short from its Thursday, April 18th highs up here. And so in this case, if it's having this amount of trouble and silver does break down, you will see ultimately gold break down as well. Now, silver has actually almost traded its objective. Literally, you could say it probably did. All that being said, even if it did trade its objective, silver is still in a 50% halfway back short, and we still have an even deeper decline here scheduled in terms of what silver's objective is. So again, as long as it stays beneath this 27.95 level, we're in line to see lower prices for silver. That ultimately should turn into lower prices for gold, especially with gold being in this in between long and short setups. This may be the decider. Keep track of it. Going on to stocks, we had just an unbelievable day in stocks, and I'm going to start off with the NASDAQ because it's the NASDAQ trade that we all took and that we made, frankly, a lot of money in. And it was I think I've signaled it as a B plus rating, and so I wish all B plus trades actually turned out like this. What you will see here is that we were trading above the 61.8% line, and we actually touched the 72% line on the NASDAQ. And the importance of that is that the NASDAQ is not always very technical. It trades above its 61.8% line most of the time, but a 72% line touch and an actual resistance at that point I thought was really important, and that's when we decided to jump on it in this I guess pea soup, or however way you want to call it, whatever ICT mentions. You basically had an opportunity to get yourself into a position, and that's what we did. We sold it at 18,240 or 18,250, somewhere in that range, and we ran it down to the very bottom, 18,182, 18,190. We ended up taking took some partials there, but I actually called the full take profit because I do think that we're going to trade higher here, as we're going to trade the first full legitimate retrace after a trend break. And I'm going to call this a trend break, even though technically we have not traded below the 61.8% line. I do think ultimately we're going to do that. What you'll notice is that this NASDAQ trade is respecting the 18,215 level on a 36-minute time frame. I suspect that we're going to run up and trade that level again for a second or third time, probably in Asia or London, but probably in Asia. So, expect to see this high here at 18,221 probably get tested again, and we could even go to 18,226, honestly, take some liquidity and do some things. But I think this is a significant high, and so we're going to treat it as that. Again, probably we probably don't have a position right now. I will more than likely end up signaling one, but I do want to see what happens in Asia and Europe. We may get a chance to trade this level tomorrow also in New York, so just be careful about that. One of the things that you will notice is that in this run-up, and like oil, we had plenty of series that we traded to get down, and then once we broke the series, that's when we had this trend up. But what you're seeing is that we've extended this trend probably too far. and it's that extension of this counter trend long that is going to be the downfall of the market. And not a lot of people are calling for shorts. I still am, and partly not only because we traded that short today, but we still have an opportunity actually to get back into this trend channel. And getting into this trend channel is really important for me. That is what I want to see happen to the market tomorrow. We should sell into this trend channel, and then keep selling off. And that would be ideal. That's what I'm looking for. We have the fib level, we have the resistance. Now we just need to ensure that we've got the resistance here in these lower time frame fibs that will allow us to do that. But ultimately bearish on NASDAQ and bearish on all the other stock indices too, because they all have very similar setups. Again, a series of fibs to get down here. And for those who are new to the channel, I'll even do this exercise for you. From the top, we traded this fib here, right at the 70% line, just above the 61.8. If you want to look at it, we can do this again. Trades the 70% line for a second time from this level, actually, just above it. But ultimately, it's about closes, and closes on a 36-minute time frame basis is generally what I would consider. And at that point, we peaked above it, and then we failed. And then what you can see is that we just keep trading down in a series from these highs. Very similar setup, 70% line, boom. And then, ultimately the market kind of gets it. And then we actually, on the fourth time here, trade the 50 to 61.8, and the market knows it's going to sell off. And so a lot of people were set up for that. And then we ended up going and trading an extension because we did not do a retrace. So we draw an extension from lows to the lows. We actually traded this extension once, twice, 3 times before we hit the objective. That's number 4. And then we've got an extension here, 5. And what you can see is we actually traded it once, started it down, but then we broke the extension. And that's how trends fail, or you end up getting counter trend longs, is because we failed that extension down there, and now we're in counter trend long territory, similar to the NASDAQ, but still really in a good spot, frankly, for us to get a short in. So let's draw this up. And I'm going to copy, let me draw up this short here. And so we know that this long has, or this short has basically is going to go from highs to lows. This is an all the way halfway back short. And again, above the 61.8% line, just underneath the 70% line, very similar at this channel. Really important. Really, you can interchange all of these. They're going to have a very similar pattern. We've got targets down here all the way at 48,777. So, you could take a short here with relatively low risk and experience a massive 10 or 20 to 1 reward to risk ratio. That's how big this next upcoming fall could be. But we need to see more. Obviously, this short will need to trade on a lower time frame basis. And so let me kind of blow this up for you guys, and you can see that we are starting to see a little bit of the short trade, and we actually went to the 61.8% line in YM, or in ES. So that is a good mark. We could look at that and use that level. We may retest that level again because we like to test stuff 2, 3, 4 times, especially major levels like this. And I suspect there's lots of back and forth in place. So don't put all of your size on at once. Just recognize that we could be in this trade for a long time. So just try to limit yourself, maybe a 1 or 2 lots, and work from there. And you'll keep adding as it keeps going your way. Same thing in the Dow YM. YM, a massive opportunity here as well. Very similar structure. I'm not going to do all of it, but what I am going to do is I'm going to do the fib, and you'll see that we're right in our golden zone. This is where you should be selling. YM did not sell off nearly as much as the other two. As a matter of fact, it really did not put in much of a structure up here yet. Yes, there is the makings of one, but I think it is just there's the first one. So we've got similar structure, I guess, and ultimately the goal here is to see YM trade down to this 23.6% line, 38,942, as well as 38,884. Each time you dip below the fib levels in these, that just goes to serve as more confirmation that we have the right resistance level and we're in the right side of the market. Again, not many people are talking about short stocks. They see this big bull run up here, and the fact that we've run up over the last week relatively quickly, and they're starting to think buying, and yet it's actually the time when you should be selling. A lot of distribution. One other thing to look at around stocks is that here we are at highs with the NASDAQ, and when you look at the ETFs, and I've got a ETF filter here for risk on. All the risk on ETFs, the ones that really do respond to high, should be going higher with the market, are not. ARC was down. The semiconductors were down. XLK, XLY were down. So that tells me that we may be closing at nearly unchanged or down small in the market, and yet these things were down pretty significantly. That's just more indication that there is distribution happening, and you should actually be ready to sell these indices and these stocks. A lot of retail is probably buying in and bought in today because we basically hit new highs. But it's the absolute wrong time to be doing that. Your risk-off ETFs actually perform really well, and it's the reason why I think you're going to see a pretty significant decline going forward. Your risk-off ETFs actually were up pretty significantly today. So that takes care of the stocks, and I do think that this actually leads into Bitcoin, which for those that didn't know, we sold Bitcoin yesterday at 64.5. It's trading at 63,105. And the reason that we sold it, yes, we were up above the 61.8% line. But more importantly, when you look on a daily chart, and we actually had some opportunities to go higher in Bitcoin, and it's unfortunate that we didn't, because I know that a lot of folks that are here on the stream had some Bitcoin positions. What ended up happening is Bitcoin did break the 61.8% line of this long extension. Now, yes, it has popped back up above it, but look at what it's trading now. It is actually also trading a short from highs, and it's respecting that short. Ultimately, I expect Bitcoin to trade down through this 70% level once and for all. It gives us a nice bogey here, a nice target or TP1 to go after. But more importantly, your TP2 is 52,434. This only happens if the NASDAQ sells off. And that's what this is telegraphing to us. It's a coincident indicator. The NASDAQ has a really good shot of selling off here. And that's why we're short Bitcoin, and that's why we're short NASDAQ. There will be, as I said, there will be counter trends. You will be able to get into these moves. These moves take a long time to get into. Don't worry if you missed the sell today. You'll have opportunities to sell Bitcoin and NASDAQ and all these other stock indices over and over again as this trend is going to continue. We basically had In Bitcoin, 1, 2, 3, 4, 5, 6 relative up days, but we actually had probably a month's worth of declines, and I think that you're going to see something similar. Same thing in the stock market. We've had 5, 6 strong days, but the fact is the previous month in April was all down, so you're going to get that. That's all I've got for now. Hopefully, if you've got any questions, feel free to chime in. If you're watching on YouTube, please hit the like and subscribe button. If you want to get access to my signals, message me. I can get you access. I do offer a 3-day free trial for those who want to join the signals group. We had a lot of fun today. Again, we'll see you guys tomorrow, bright and early, and we'll hopefully make more money in short stocks, and we'll figure out what to do with gold here shortly. Have a good one, guys. Talk to you.